current waves. The mission statement on my site is very simple. I will spend less than 5 minutes every day detailing my wave counts, applying it towards the equity indices and few of the commodities that I follow very closely. My objective is to assist the followers and viewers or traders and hopefully have an added advantage and increase the odds of success in the market. I've spent many years understanding Elliott wave theory, and I applied them in my past trades and had tremendous success. I had many errors and losses during the journey, but as long as you stay disciplined, as long as you trade the big waves and you're not a short-term trader, I do think that there's a very good chance that you come out ahead. Trading is a very tough business. If you're a day trader, if you're a short-term momentum trader, I think your odds are pretty stacked against you. But if you're a patient trader that could look for the setups and trade the big waves, I think you could have tremendous success. This site is not going to get too technical. It's going to be very simple, brief, to the point, and I will give you my forecasting at the end of the 5-minute segment. And I will talk about the setup that I like the most. But going into the Dow and the S&P 500 and the overall indices, Elliott wave has been giving you a screaming sell signal right around December as we hit the fifth wave. If you look at this fourth wave here, which ended in 2009, you could clearly see 1, 2, 3, 4, 5, this 5 waves in the larger 5-wave cycle took about 9 years. All this quantitative easing has really created a massive bubble here in the marketplace where you're looking at 23 times trailing 12 as far as the multiple is concerned. I really feel that the Friday's action, which is the biggest fall from, I think, compared to, I think last time we had a fall like that was Brexit. I think this is a good indication. And if you draw a trend line, we've been at this melt up thrower stage for about a good month or two. I think I call the S&P 500 to be at top around 2,700 and the Dow to be around the 25,000 in this area. So I was a bit early, but I think if you look at this hourly chart, I think you're at the initial stage of a massive sell-off. You're looking at, I mean, this is really an easy reading from 1, 2, 3. You have the one that took the indices down to about 26,000. Then you had the ABC. It seems like this is a flat triangle for wave 2. I think they finished around 26,200. Then you had this star, most elongated the wave. I don't know if this decline is ended. I do not know if we're going to get a further follow through on Monday, but looks like if it has ended, you might get this fourth retracement. It might be a triangle. Once again, the corrective waves in the Elliott wave cycle are the most difficult to discern and detect because there's many parts to the triangle, whether it could be a flat, a zigzag, triangle, could be a barrier triangle, it could be an expanded triangle, it could be a contracting triangle, it could be a double twos or triple threes, it could be a combination. So there are many variables as far as the corrective waves, but my assignment here is not to give you exactly what is happening with the waves, but just to give you a general outline of where we're on the wave count. So with that in mind, the setup that I like the most here, and I think it's coming up, I don't know if it's set up already, but it's really the oil and the dollar. If you look at it, if you look at the dollar chart, going back to 2017 March, we had this 1, 2, then all the way to the September 3rd wave to the 4th retracement into November 2017, and we're getting this final leg here that's going to conclude right around the $88. Now, if you look at the crude oil setup, it's interesting because you had the second wave here in the 2013 September, and you had this massive third wave that brought the oil down to $26 per barrel. This is WTI futures, and this length took about 2 years, and this also is taking about 2 years. Right now we're at the fourth wave retracement. You have clearly A, B, C, and we're at the last leg of C to finish off the fourth. And the question mark is, are we at the near the top, or does the oil have 2 more legs left? And when I look at this more closely, here's the wave count from the finish of B. This is the rest of the C wave count. I think we're here at 1, 2. I think this is another 1, 2, 3, 4 to finish the 3. I don't think the 3 is done yet. So 4 and down 5. And I think that's it. I think the low 70 is where your target is on the oil. Then once again, going back to this chart, this is a screaming short. And I love the headlines that's coming in. Goldman just stated that their target for oil price is about $80. That hit the CNBC a few days ago. So I love these contrasting headlines while there is a major turn of event happening in the price. I do believe that the next fifth wave leg is going to take this thing below 26, and usually this is a 2-year cycle, so I expect another 1.5 to 2 year cycle for this fifth wave to go below the $26 barrel. That means my choice here, and my stock of the choice is the WT right here, 1087, $40 a few months ago. Now it's at 1087. Absolutely got crushed because a tremendous rally we've seen from the 40s to the 60 in the crude oil. This is the ETF, 3 times levered, inverse. So I don't recommend you holding this for long term because there's a lot of decay when there's contango and backwardation. So, but this is a really bang for the buck play. You just gotta have a lot of stomach. You need to stomach this volatility because this will be highly volatile. You could easily give 20-30% in a one swing. So you got to have the stomach to hold these type of volatility. Okay, so that's it. I went a little over 5 minutes because I had to, since this is my first edition, I had to really explain what my thesis is. So my setup is truly on the oil, and I'll be focusing on this interpretation. And I will post my wave counts after market. Once again, it'll be really brief and concise for 5 minutes. So next update will be Monday after the closing of the commodities at 5 p.m. Okay? Thanks and have a